You are looking at a daily chart of the Nasdaq, which undercut Friday's low. It undercut its 200 simple moving average and closed just a tick below the 200. So that is all negative news. Lower lows is not good. If you're trying to make money on the long side in the stock market, if you're on the short side, you're having a hell of a party. Welcome to my daily review. Today is Monday, March 3rd, and March started up like February left off, and the Nasdaq was down nearly 500 points or 2.64%. Volume 2% above the 50-day average volume, and the market has corrected now more than 9% from the peak here on December 16th of 20,204. I guess I should give you the low today, which was 18,216. The low on Friday was 372, so it undercut it by quite a bit. It also took out all the gains from the rally after the election, post-election rally of 18,250, right? What was the low today? 216, so it undercut that area as well. So you're just looking for levels of support, and I'm thinking 18,083 would be the next one. I would think that 200 would be some support here. We're going to find out, and if it undercuts it, then we could be in for quite a bit more pain. So you just want to keep an open mind, be flexible, and just take it one day at a time. I went from red to yellow on the Nasdaq because today was day two of an attempted rally. But if you tried to make a trade today, then I'm sure you got stopped out and lost money. And that's just the market telling you to, stay out, or you're going to, suffer a death by 1,000 cuts because a lot of trades are just not working right now. Anyway, that is the Nasdaq. I'll just cruise on over to the SPY. It's a pretty similar story here. It's well above its 200 though, which is a good thing, but undercutting the prior low. So the attempted rally is off the table, and we'll just have to wait for another day on the S&P 500. Did not undercut the low from January 13th of 575.35. Came pretty close though, huh? 579.90. Yeah, okay. Anyway, obviously, when politics, whenever it interferes with our investments, investments lose and politics win. That's been my experience for over 40 years. Anytime I own stocks that have political, ramifications or politics get involved, they usually sell off because Wall Street and the market, they're going to err on the side of caution. And one of these days, the market's not going to respond to tariff talk. It's just going to go flat. And that'll probably be the day to go long. Um, but that day is not here yet. So we had more tariffs put on the table today. I'm just going to go through some of these Mag 7 stocks. I have not been following these at all. I don't think these are stocks to own at all. I think they've kind of been played out, over-owned, tired, whatever you want to say. There's Apple just flatlining. NVDA looks like it wants to start a stage four decline. Tesla had hopes, that it would bounce off its 200 here, but just came right back down to it today and closed a little bit above it there. You can see 279 is a magic number today, but yeah, just not good. I mean, that's a clear downtrend here. All the moving averages are curling lower, so I'm not even going to entertain those. I think you need to look around at some of the smaller names. It's thought of in its early innings in the AI play, but if you look back at the 2000 dot-com boom, very few stocks really did well. I mean, we had this initial surge, and then a lot of them just sold off and crapped out. So you don't want to own those stocks that crap out. And I think some of the smaller stocks, there's opportunities there. Anyway, it's still earnings seasons. I'm going to get to earnings. One of the earnings plays today I was very encouraged with was TGTX. They reported triple digit sales and earnings growth with margins, just incredible margins. You can see the sequential, this is not year over year, this is quarter over quarter, 63, 73, 85, and now this quarter, 108. That's pretty impressive for TGTX. They're pretty. I listened to the conference call and they said that they had record subscriptions in January and February, which is this quarter, Q1. and it's 2/3 of the way over, so it stand to reason that they would kind of bump up, their guidance, but they didn't, and they kind of said, that these subscriptions are not linear, kind of like your equity curve. It goes up, it goes down, it goes up, it goes down. And so they are being cautious with their guidance, but man, they're taking market share, and they have something that's kind of unique is they have, recurring revenue from patients. First of all, they have a patent till 2042, which is a long ways away, like 18 years. And they're keeping their patients alive. They have the best drug and show. And so these patients that are on BRIUMVI could live, 20, 30, 40 years. So they have recurring revenue from patients, and they're adding patients. So this is going to be a compounder here. I think, next year they're looking at $2 in earnings. I think it'll probably do more than that. And what's a stock that's growing at triple digits with $2 in earnings worth? I'd say, easily, low base price of bear market scenario would be $60. The CEO gets a $16 million bonus if the market cap is over 10 billion for a couple quarter duration in the summer of 2026. I know he's shooting at that. So all systems go for TGTX. Technically, it just undercut the 50 and rallied back through today in a weak tape. I mean, this thing was up, yeah, 14% with massive volume in a week tape, and closed at 68% of its daily range. So pretty impressive day for TGTX. So congrats to the longs there. This thing, man, over the weekend, there was a lot of hullabaloo about, Bitcoin or strategic reserve, and it's all just a bunch of talk and show. And, retail folks are getting hurt there. They jump in at this stuff, and they jump in at Robinhood and MicroStrategy, and it's just a sucker's play. And you can see here they reported earnings, and this thing just sold off all day. This is the old okey doke right here. And yeah, I mean, I'm sorry if you got suckered into those Bitcoin or crypto related plays. Robinhood is my favorite in the group. I got to admit, had decent earnings, but just, it sold off all day. This is one of my favorites in the group, but it's married to the 50 now. It pulled back for the first time since the breakout to the 50, and it's just married to it. The more time that it comes down to it, the more likely it is to crash below it. So beware there of Robinhood. All right, I'm just going to get to some stocks that, I put on my ready list, and I don't know if people, this is not for everybody. This is GRRR, Gorilla Technology, and they signed a $1.8 billion contract with the city of Bangkok, Thailand today, and it was trading up near 40 in pre-market. And this is one that has like a 20% or 25% daily range. So this will make you seasick. If you just look towards last week, I think it was down, yeah, $19 last week, and it was $38. So it doubled within a week here, folks. So you need Dramamine to hold this thing. I would just say on this, I think I said I like it above 30, but I'm not, you buy the dip and then you sell these spikes, right? Every time it spikes, it comes back down. So, you want to buy here and then sell up here. If you were buying it earlier, buy here, sell here, buy here, sell here, and you missed out on this move today. But the 1.8 billion contract is spread out over 15 years. And so when they structure these types of contracts with cities, this is very attractive for cities, and I don't think Bangkok's going to be the last contract they're going to sign. I do have a video of their CEO Jay Shandon, and I should post it on MC Stock Charts. I'll dig it up. They're going to sign more contracts this year because it's very appealing to the city to pay out over time. They're structuring at 15 years out, 1.8 billion. Well, that's not very much for a city like Bangkok for their IoT services, and they have cutting edge technology. So I'm thinking they're going to get more contracts. They're going to announce more of these contracts. And you think 1.8 billion in the market cap, even after today's move, is less than 600 million. So people are doing the math. Well, 1.8 billion, but it's spread out over 15 years, and that's what people came to the realization during this session here. I saw it trade 40 in pre-market, and then people kind of, caught on, and the market was weak today. But still, this thing was up 6.5% in a week tape. And I think it's going higher, but just, when it comes below 30, which it will, you take a swing at it, and then when it goes above 30, you sell the spike. And that's the way I would play Gorilla. And I just want to on my ready list this week, I have, I don't know, maybe 6 or 7 stocks, and I tried to get a variety of different types of stocks. I wanted these fast movers, and I also want, some larger cap stocks, some slower movers like Duke Energy. You can see this one setting up, and Eli Lilly is another one that's pretty strong. Yeah, these things that are up on a day like today, I mean that is really flashing a neon sign of a relative strength. Anyway, I just wanted to point that out. Before I get to my themes today, same thing over, the last, I don't know, 2 weeks of February, now starting into March, these European banks, a lot of the European stocks and just, yeah, South American stocks are just doing better than U.S. stocks. So money's coming out of the U.S. markets and into these stocks. This is BBVA. It's a Spanish bank, and obviously, you look at that chart and say, hey, this thing's doing okay. Santander is another bank, a Spanish bank, doing fantastic. I'm just pointing out strength there. I'm not saying these are set up in bases. I'm not saying go out and buy and it's going to go to the moon. I'm just pointing out relative strength in a weak tape because that's what I do when the market's weak. Because I think that if we just acknowledge some of these stronger stocks that are holding up, I know some people like to say they're beach balls underwater, but they're just showing relative strength, and I just want to acknowledge it. This is Barclays. As a British financial services, flat on a day like today, we'll take that. It was higher earlier in the session when I looked at it and wrote it down, but yeah, like everything off, that thing sold off into the close. BAE Systems, this is a UK aerospace, Europe could be gearing up to, go to war with Russia. You never know. So speculators are getting in, and this one was up 18% today. It's unfortunate. United Kingdom stock, I don't like to see that, but I'm just showing you relative strength in the market. And then the ArcelorMittal, this is a Luxembourg-based steel producer stock. The steel stocks were not up today, but this is a, foreign company that was up 6%. So just showing you strength, and that's just what I'm going to do today. I'm going to the REITs. This is these are defensive names. This is Welltower. REITs, they pay, big dividends. I think, most of them pay monthly dividends. And so, there's like a flight to safety. I can buy this, hang out here, and, they're going to pay me a dividend anyway. Um, I don't know. Some of these are doing well. So I'm just pointing it out. I'm not really interested in owning these for a trading, swing trade, but I'm just pointing out some relative strength here. This is EPR Properties doing well, and then Regency Centers operates community shopping centers and supermarkets. Kind of surprised because Amazon's kind of killing that business, but Regency's showing strength, breaking out of that base there. And you can see this has had a big long base here. Base on base pattern, 10 weeks, 12 weeks, that's 22 weeks now starting to break out. So once again, just trying to show, relative strength. Simon Property Group, yeah, regional malls is really kind of baffles me because malls haven't been, I don't know. Amazon's kind of everybody just shops on Amazon, gets it delivered to their porch. But nice bull wedge pattern here, pull back to the 21 and pop. So just, all is not lost. I mean, not everything's going down. There are some areas of strength, and these are defensive by nature. This is Alliant Energy, LNT, breaking out of a base here. I've shown, in the past videos recently that these breakouts from bases have not been working, but we'll see if this one works. I showed you Duke Energy earlier. Once again, setting up in a base, a nice pullback on the handle there. Slower moving stock. It's a steady Eddie, pays a dividend, but, up 1% in a week tape. today. So just pointing out strength in I. This is knee source. Yeah, making new highs. I mean, come on, that's a good looking chart there. And then Wisconsin Energy, or the old Wisconsin Energy, I can't get out of my head. I always call it WEC Energy Group. Yeah, making new highs. All right, let's move on because one area that I like that I will play in, I showed you TGTX earlier, is the drug stocks. Now RFK has been inserted and that uncertainty's out of the way. And some of these drug stocks are really powering higher. Gilead looks fantastic. It's surfing its 5 EMA, and that's pretty rare in this tape where a lot of stocks are trading below their 50 SMA these days. So Gilead is flexing like Arnold or like The Rock. This is AbbVie, another one breaking out of you can see this cup with handle. I mean, it's a little fragmented chart here, but I think you can see that. Yeah, everything just fell out. Probably an earnings miss. And then now breaking out of this base, 16-week stage one base. That one looks pretty good. That's AbbVie. US stock, you got to consider that some of the probably the US stocks have a little bit of an advantage now with, I don't know, the tariffs going in, and I don't know, this administration's hell bent on tariffs, so probably a little bit of an advantage to the US companies. I don't know. It's like I say, one day they'll yell tariff and the market won't react. I'm waiting for that day. See, PRX, this one undercut the 50, rallied back up, closed above its 50. It was higher today, but I think it just got murdered with everything else. Yeah, look at that into the close. Yeah, when I wrote it down, it was up and now it's down. So doesn't take long. That's why you got to trade quickly, and take your profits quickly in a tape like this. Because if you don't, they're not going to be, your profits will be gone. Poof, vanish into midair like a magician, it just disappears. All right, some of the other medical names, not so much drug names, but medical product stock. This is Medtronic's making a new high today, breaking out of this base. It pulled back to the 50. That looks pretty good. It's found support and balance. It's been up, with volume like 10 days in a row. Abbott Labs, another one of these medical diversified or medical product stocks, drug stocks, surfing its 10. That one looks fantastic as well. MASI. This is medical systems equipment stock trading higher, which reminds me of Intuitive Surgical. These are like invasive surgeries, hanging in there, kind of like everything else, just kind of like wallowing along by its 50. DGX is a diagnostic, Quest Diagnostic, medical services stock, broke out, trading higher, just trying to show some strength. Not everything's going down, so don't get too depressed. This is the time where, you got to hone your watch list, and we're on the sidelines now for at least a few sessions until, it recovers and heals and maybe starts an attempted rally. All right. Once again, the other area that's doing well is the insurance stock. This is Bro, not to be confused with Bros, which is doing well also. But this one just keeps grinding higher. I know a couple folks at MC Stock Charts bought this one, and it's performing well. AJG, which is Gallagher. Yeah, I mean, yeah, the insurance stocks are just, yeah. If you got your insurance bill, you know why. Progressive, doing well, making new highs. We like new highs. AON, yeah, the insurance place. So these are the same companies, and you can see they've been doing well for a while now. So this theme has been carrying on since February and into March. So if it's not going to change, like my old football coach used to say, we're just going to keep running that same play, until they stop it. And global life here and insurance, life insurance, stock making new highs today. So, that's where your money wants to go, where it's treated the best. And that's what's treating it well right now with the foreign banks and the REITs, utilities, the drugs, the insurance. And trash. You got to go to the trash bin. Waste management. I know it's only 0.5%, but when the market's getting crushed, 0.5% is great, Republic Services is RSG, another trash stock. I mean, this thing's making new highs, so you can't argue with it. And then ARIS made a new high today, then reversed lower, down 3%. Had a big week last week. So let's take a look at the weekly here. Yeah, had a big week last week, made a new high this morning. And if we go to the 5 minute chart, you could probably see that old okey doke. Yeah. Okey doke. Yeah, buy this thing. It's going to rip higher. Oops, sorry. Nope. Took your money and ran. All right. And I did mention bro, so I'm going to go through some of the retail restaurant stocks. This one finding support at the moving average. This is okay. I think you got to look a little longer term with Dutch Bros. This one, like TGTX, I believe, is going to be reporting for outstanding quarters in 2025. So this one right here, having resistance a little bit at that old high there. So for it to go like this for weeks and weeks, for a couple of weeks before breaking out is totally normal, expected. And that's, kind of what you want to see. You want to shake out some of those, swing traders, day traders, some of the weaker hands, and some of the institutions are going to pile in and take bros higher. You can see all the institutions in this thing. It's over 400 now. So, yeah, Dutch Bros to me is no-brainer hold stock for longer term. Brinker, how did Brinker do today? Oh man, down 4%. It was up. I put this on the ready list. Yeah, it's just a tough day. Yeah, it was up. Man, look at that close. I guess just kind of like everything else. And same with DRI. I was going to put this one on, but I think, I think I had bros and eat. That's enough. Same profile. Just, made a new high, sold off into the close. What are you going to do? I mean, when the Nasdaq's down like that, I mean, oh boy. Yeah, made a new high of 203.12. So if you chase new highs, you're going to get burned in a tape like this. Anyway, that's it for me. Keep your head up. Keep the watch list focused. It's a very important time to stay engaged because the market turns quickly. And when people would just say, oh, they throw in the towel, this sucks, I'm not going to do this, you're going to miss out on some great opportunities. And so keep your head up and never give up at mcstockcharts.com. I have one more thing, and that is tonight's earnings. I consider cybersecurity like one of the essentials of our current environment that we're in here. Like Apple's an essential. You got to have smartphone. Google was an essential. I don't think so much anymore with, AI and Chat GPT. And, there's a lot of competition now. And I certainly don't think Meta, social media is not an essential. But cybersecurity is because businesses cannot afford to be hacked. And OKTA reported a nice quarter tonight. I'll have more in the morning on this. Probably have trouble with 100 in this tape unless the market's going to be more forgiving tomorrow. We'll see. CrowdStrike reports tomorrow, and yeah, it's up on that Octa news. Some other reports tonight was SMR. One of the things that I like about, the weakness in the tape, this is up after hours, by the way, and I'll have more on this tomorrow. It looks like it might bounce off its 200, but we have seen the nuclear stocks get nuked. Some of the froth is coming out of the market, and this is a good thing. The nuclear stocks, Oklo. Yeah, so it's below the 50. So, this thing was 59, now it's 29. So that's what you want to see. Some of these stocks that got ahead of themselves a little bit, profit taking. This is some of the froth in the market coming out. This is healthy. Longer term, that's Rigetti, which is getting punched to the gut. IONQ. This is a quantum computer. Yeah, this is taking a gut punch too. So, these things needed some haircuts here. 54 down to 23. I'm sorry, but they don't have the earnings and sales growth that warrant, this $54 price. And it just is a lot of froth in the market, and now it's coming off. It's like when they pour you the beer, you have all that froth and you just knock the froth off. That's what's happening to these guys. All right. ASTS, another trash stock. I know people like it, but man, they don't have any earnings or sales. Must have said something positive after hours. It's up nearly 3%. So this is another one that got ahead of itself here up at 38, then pulled back to 17. So now it's recovering, traded through its moving averages. Just not something I'm interested in. GitLab reported after the close. It's up 4%. Very nice. Computer Tech Services, which reminds me, Credo is reporting tomorrow. Okay. So we'll be watching Credo and CrowdStrike tomorrow. ADMA, this is a drug stock, was a big winner. I liked it. And then they had some accounting issues and some shaky stuff. So I don't deal with that at all. There's no need to. Why buy ADMA when you could buy TGTX or an Eli Lilly and not worry about any of that fraud stuff. All right. And the last one is Giga Cloud Technology, another one that had a lot of hair on it, short reports and accounting issues and just too much shadiness. So I ignored this one a long time ago, down 8% after hours. All right, that's it for me. Thank you for watching at mcstockcharts.com. We never give up. Keep the watch list honed in. Keep the focus list super focused. We're going to tighten that up tomorrow. And at mcstockcharts.com, we never give up. So you don't either.